What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I want to break down why the stock market is crashing right now as we're seeing more recessionary fears and more tariffs that have been imposed on the US. I'm also going to break down what's happening with these charts. Know that I am not a financial planner, so take nothing I'm saying as financial advice. Anyways, the market is collapsing. SPY is down almost 6%. The QQQ is down 6.21%. Looking at Nvda, it's down 7%. Tesla is down at 10%. Apple's down 7%, and the entire market is in the red. I'm not even exaggerating, guys. Look at the charts. Almost every ticker is in the red. Tech is collapsing. Finance is dumping. Health technology, consumer durables, the entire stock market is taking a massive hit. So I'm going to break down why this is happening by doing a quick recap of yesterday's video. Then I'll break down what happened because we have some new updates involving the tariffs. So let's talk about this. We had President Trump's reciprocal tariffs, okay? As a reminder, this is like the chart that President Trump was holding. As you guys can see, this is what President Trump came up with his team, basically. And they basically are saying that China is charging us 67% and the European Union is charging us 39% for tariffs, which is why they wanted to raise the reciprocal tariffs, right? But that's not actually what they charge us. If you look at what data from the WTO and other sources tell us, it's different. So President Trump's numbers are very, very high because he is accounting for the trade deficits, right? When you look at the trade deficits, there's a deficit of about $295 billion between the US and China. With Vietnam and these other countries, it's quite high. This benefits the US to some extent because we benefit from cheaper labor. But at the same time, President Trump argues that this is a ripoff. At least that's his perspective. So he came up with these calculations. You take the trade surplus, divide that by trade exports, then you divide the number by 2, and then you'll get President Trump's reciprocal tariffs. So I went over this yesterday already. I'm not going to go over the full details. These are the calculations for like China, right? He claims when you account for the deficit, they're basically charging us 67.3%. Divide that by 2, and then President Trump started charging them 34%. That's what he wants to charge Chinese, Chinese goods. That's going to be the tariff on them. For the European Union, it's the same thing essentially. He wants to charge them 20%. That's what he has been imposing. And this caused a lot of controversy because, like I said yesterday, the Europeans claim that they're charging only 1% on US goods, and that when it comes to trade, the US collected about 7 billion euros on tariffs on EU products in 2023, but the EU only got about 3 billion euros on US goods. So they're saying that they don't actually charge that much. Even data from the WTO has said that on average, the tariffs that Europe charges the US is 4.8%, very far away from President Trump's 39% figure. He gets the numbers from the deficits. Okay, he's accounting for the deficits. That's where he got the 39% from. That's why he's charging 20% to Europe. But the Europeans are arguing that no, they're actually charging 4.8% or below. And that's why it's causing a lot of ruckus, a lot of fighting right now. Okay, so that's where we left off yesterday. If you guys want a lot more details about the calculations, just watch my video, the one called Madness Tomorrow, where I anticipated more downside in the markets. Watch this video if you want more details on these calculations. But that's just a summary of yesterday's video. So where do we go from this point on? Well, we had some big news that came out. This morning, China has now imposed 34% retaliatory tariffs on all goods imported from the USA. That's massive, massive, massive news, guys. China is now retaliating. They're fighting back, and they are very relentless. President Trump said that as a result of all of this, he is not going to be stepping down. He's not going to give up. And he's going to continue to maintain the high tariffs. That's what President Trump said so far about this. That is huge news. So that's the first reason why the market started collapsing. China is retaliating, and they have 34% tariffs now imposed on America. So they're fighting back. And then we have the European Commissioner who gave a speech today. She mentioned that she said that the US has let them down and that this is going to hurt the European economy, and that they are willing to negotiate with the US and President Trump, but simultaneously they're open to also imposing retaliatory tariffs on the US. So they want to negotiate, of course, but they're also open to retaliating, and they want to increase tariffs in the US as well to once again do what's best for their people. So you have to remember that President Trump it has the US's best interest at hand, or at least he claims he does, right? That's what he's based off his arguments, based off what he's calculating, that's what he's trying to do. And then the Europeans and the Chinese have their interests at hand, right? And then they're going to be trying to fight back when President Trump tries to increase tariffs. So this war is going to cause prices to go up like crazy, at least for different sectors. I mean, if you're truly going to be imposing 34% tariffs, that's going to cause a big difference in prices. And the thing is, yes, I know that there's a possibility that they're going to negotiate, maybe lower the tariffs. I hope they do. But for now, there's no sign of that. The countries are fighting, and it's causing a lot of fear right now. So, why am I talking about higher inflation? Why do I bring that up? And I want to actually talk about the next thing that happened. So, firstly, in the morning, President Trump gave a speech. Here's what he said. I have some quotes from him. He said that he had a very productive call with To Lam, who is once again the General Secretary of Vietnam. He said that Lam told me that Vietnam wants to cut their tariffs down to zero if they're able to make an agreement with the US. And then he said that a lot of progress is being made. Then he said that this is the time for Jerome Powell to cut rates. That's what Donald Trump basically said so far. So he wants there to be more rate cuts. He's saying that there's been a lot of progress. He thinks that we're still doing very well, and it's going to be worth the pain that we're going to be experiencing because the U.S. is going to become rich from tariffs. That's what President Trump said, and that's pretty much it. I didn't see too much from him after that. And then we had Jerome Powell speaking, and when this guy spoke, the market dumped even more. So why did Jerome Powell cause the market to dump? I'm going to read his quotes for you guys, okay? Jerome Powell said, "It's becoming clear that tariff increases will significantly cause changes that are larger than expected. The same is true of economic effects. It's too soon to say what the appropriate path is going to be for monetary policy, but most measures of long-term inflation remain well anchored." So he gave the same speech he typically gives, but then he said something huge. He said that the tariffs are likely to raise inflation in the upcoming quarters, and there's going to be more persistent effects as well. He said that the growth and labor market is in balance, but still inflation's well above their 2% goal. He also said that the outlook is very uncertain and there are going to be risks of higher unemployment and higher inflation. Then he said that the Fed is going to closely watch the tensions between hard and soft data. And then I'm seeing a lot of headlines that are saying that Jerome Powell says that the tariffs are going to be raising inflation in the upcoming quarters. He said that it's too soon for them to make big changes. The Fed has to wait just for the time being. And then he said once again that the tariffs are going to generate rises in prices. Progress towards the 2% inflation goal has slowed down, and unhappiness in the economy seems rooted in earlier inflation. So Jerome Powell is saying we're most likely going to see an increase in inflation, and the progress the Fed is making has been delayed. So, not the best of news. The progress has been delayed. There's high inflation, and we're likely going to see an increase in inflation. That's what Jerome Powell is now saying about the tariffs. So, I didn't expect him to say it like that, right? I thought he would be a lot more ambiguous, but now he's saying that he is anticipating that, and that caused the market to just collapse. SPY is moving like a small cap. It's down 5%. Typically, SPY and the QQQ are not down that much. So that's crazy. Going into next week, okay, we have some bill auctions on Monday. On Tuesday, we have Daly from the Fed giving a speech. On Wednesday, so basically Monday and Tuesday are more quiet, but then Wednesday we have the FOMC minutes, which is kind of like FOMC, except it's going to be a report on paper. On Thursday, we have CPI data. And on Friday, we have PPI data. So Wednesday through Friday is going to be very significant. So just keep that in mind. That's going to be affecting us. For earnings, there's not really much coming out. Lots of retail and some airlines between Monday and Thursday. And then Friday is when things get very serious. We start big bank earnings from JP Morgan, BlackRock, and Wells Fargo. Get ready for big bank earnings on Friday. Anyways, with all that being said, guys, I see zero signs of a bounce. If we don't hold this low, I think we test 500 and 494. And if that doesn't hold, we could be dumping all the way down towards 480. So we're watching 500 and 494. No sign of a bounce. We're seeing capitulation. Lots of fears of higher inflation. I think I forgot to mention this. Detail. Sorry about this, guys. JP Morgan's economists are now saying there's a 60% chance we hit a recession. within the next 12 months, I believe. So now there's recessionary fears, fears of higher inflation from Jerome Powell, and that the fact that the Fed's progress is going to be slowed. There's China increasing tariffs in the US. It's just a lot of fear that's going to be coming to the markets. It's already there. There's even more to come. I don't think the market's in a bottom yet. We're going to be looking for 500 and 494 on SPY. If it doesn't hold, we should be expecting even more downside. We look bearish. The QQQ looks bearish. I could be looking for a test of 415. We actually have a very strong support here, so I do think we're going to be testing this. Basically, look right here. Right here, we have a very, very strong support near this like 413, 415 area. We got to hold that, or else we're going to be dumping to the low 400s. So watch 420, then 413. For the Russell 2000, we're falling even more. We could be dipping towards 175 or below if that fails us. The Russell actually has a gap way back here to fill. This gap is going to get filled all the way down to 169, then another gap at 165. So we're just getting started with these gap fills. There's no sign of a bottom yet. We're trying to form a wick here, but I'm not too confident. Unless we get back with like 185, we could try to bounce. But my point is we're still looking quite bearish. For ES, we're looking relatively weak. We could be dipping all the way down towards 5,050. And if that fails us, 5,000 flat could be coming. We need to reclaim 5,300 to bounce. Otherwise, ES looks bearish still. NQ is looking bearish. I'm going to be looking for it to test about, well, it depends if we could reclaim 18,000 or not. If we can't do that, I think 17,300 is coming. Then back down towards 16,800 on NQ. We still remain bearish. For Bitcoin, it's a little bit strong. We're looking for a test of 85,000 to see if we can break it or not. This is showing some strength compared to the market, so that's some good news. But Nvda is looking weak. My concern about Nvda is that we were going to be testing 90. We have to hold that. If not, we have a gap to fill all the way down here at 85 and even more gaps below. I'm not sure about those gaps, but for now, we're going to be looking for 85. So if 90 fails us, we're going down to 85, then 80. We still look bearish on Nvidia. Tesla's looking weak. We're getting a big rejection. We're losing our support. We're going to be at risk of dipping down to this gap fill around this 228 area as we look a bit more bearish. For Apple, we're looking weaker. Big rejection here. We're looking to see if 185 holds. If not, I'm looking for 180 flats. Then the very, very big gap fill down here around this 173 area. There's a giant gap. You guys can see a big gap over here. So please be very careful. We could be coming down to essentially fill this gap. For Coinbase, we're looking weak here. We have to see if we could hold above 160 or not. If not, we could be dipping towards the lower 150s. Still looks weak. I'm still seeing weakness nonetheless. Amazon's also looking weak as we're making lower highs here. We're going to be seeing if we could break past 175 or not. If not, we could be just continuing to fall back down. I think that we're going to be retesting 175 and we'll see if we reject on Amazon. It's showing a little bit of life here, trying to get a rebound, but then it could still reject. Meta's relatively weak. We could be looking for a test of essentially 500, then back down towards the low 485 area. For Microsoft, we're also dumping right here. We're going to be looking for essentially 355 and then 350 as our potential supports. So we're not doing too well so far. Google's making lower highs here. We could be dipping all the way down towards 145 then 140. So it's not looking too good. And finally, the VIX remains bullish. It's the highest it's been since 2024. But if you ignore these two, if you guys ignore like 2024, actually, this is the highest we've seen the VIX since like the pandemic period. So this is a very significant move in volatility, and the market remains bearish. So there's no sign of the VIX rejecting, and for now, the bears are in control. So sorry if this video sounds kind of rushed, guys. I know the weekend is coming up. I'm not trying to like make a 20-minute video, but I thank you all so much for listening. I really appreciate you guys so much. Please enjoy what life has to offer. Enjoy the weekend, unwind, spend some time away from the markets. And I just want to say that, there's going to be hardships coming, but stay strong, guys. Keep your heads up because the future is still bright, even though there's going to be some difficulties for the shorter term for the next year or so. Thank you for listening. Have a good one and peace out.